JJ the CPA here. Hope you're doing well. So for those of you that have investments outside of retirement, most likely you have investment expenses. Now it may just be the annual fee to have your simple account or your IRA or whatever that you're paying. Then that fee you get to deduct. Now hang on. I'm going to tell you where, because some are going to immediately say, you don't get to deduct that anymore. And I'm going to say, you actually can. I'm going to tell you where. But also, many will have investments. Now, again, this is outside of retirement, but you may have investments that your advisor is charging what they call a management fee. So they're charging a percentage of whatever assets you hold, typically on a quarterly basis. So where do you find this fee? Well, first you could just ask your financial advisor, but if you look at the annual tax statement, so whether you're with any of the brokerage houses that you can go directly online and do your own trading, or whether you use a professional, they're all going to spit out something called an annual tax statement. Now, an annual tax statement includes your 1099s for your interest and your dividends and your capital transactions, but it also includes some key information, and typically it's on the very last pages where it indicates your investment expenses, whether it's annual fees or fees you're paying your financial advisor. Now, these fees would also include if you paid someone to do a financial plan with you. Some may do that, or they pay an ongoing fee for financial planning. This also would include investment interest, slightly different line, but investment interest, which is simply you borrowed money to then invest it. So this no longer, the investment expenses are available on Schedule A, because in 2018, they just did away with the miscellaneous itemized deductions subject to 2% of AGI. They just did away with it. So you don't get to deduct it. That's where most people knew for it to be a deduction. You can deduct investment interest on Schedule A, but only to the extent of your investment income. But what I'm talking about is to deduct both investment interest, but also investment expenses. And I'm going to give you links to all of this, but is on Form 8960. So Form 8960 is the net investment income tax calculation. So I'm a practicing CPA. I'm looking at this. I know I'm going to talk some jargon with you, but if you're not a tax pro, what I'm going to tell you is what line item to look on to see if you got the deduction, whether you're preparing it yourself or you have somebody. Look to these line items that I'm getting ready to tell you to see if it was deducted. You don't have to go beat up on your tax pro if they didn't do it. Just say, hey, I was looking here. I didn't see the deduction. Let's go ahead and get the deduction. Now, the net investment income tax is the 3.8% tax that is then applied towards investment income for those that have an adjusted gross income over a certain threshold. So for married filing jointly, if your adjusted gross income is over $250,000, for married filing separately, it's over $125,000, and single and head households over $200,000, then you are going to start paying this net investment income tax on your investment income that's over that threshold. And there's a little bit of a formula that you don't have to worry about figuring out because it's on the Form 8960 where this is calculated. But where you're looking is on Part 2, line 9C. That is where you will see that the investment expenses were deducted, and right in that same area, you will see a line item for the investment interest. Why is that important to get the deduction there? Because the investment expenses are not a deduction to reduce down your taxable income. It's not a deduction to help you with your regular, ordinary, taxable income tax. But see, this net investment income tax is another layer of tax. It's an additional tax on top of your regular taxes for income tax purposes. So with this being said, this is an additional tax. So when calculating that additional tax, which is just simply, well, what is your investment income? Well, you get to deduct these expenses to arrive at the net investment taxable income amount that then that 3.8% is applied to. Yeah, you're probably right. It's not anything probably super sexy, but if you have it, you might as well ensure you're getting the deduction to pay the least amount of tax. So I'm going to give you a link that talks about this on the IRS website, as well as the Form 8960 and the instructions. And for those that are curious, what is investment? income that then potentially would be subject to this tax. It's interest and dividends, annuities, royalties, rents, it's passive income, and capital gains. So all you really need to know is this. You don't even have to worry about if your income is that high. You don't even have to worry about, well, am I subject to it? Because I don't worry about it, because no matter what, if my client has these expenses, I'm going to enter them in to then be applied on Form 8960. So even if my client doesn't have the income over it, I'm still going to figure out if they have these expenses. I'm still going to enter it in. So in the event that they do have this net investment income tax, it will reduce it. So again, for non-tax pros, how do you know? Well, go to Form 8960, go to Part 2, look at line 9C, and it says investment expenses. And you'll see right there also investment interest, as in interest you paid. Ensure that if you do have it, that it is there, and it'll help reduce down your tax. Hey, everything counts in terms of reducing down your taxes so that you pay your fair share, no more, no less. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.
CPA, CPA, K, 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 K.